Good afternoon viewers, welcome back to your favorite research network, Live Tips. We will have a quick update on what is happening in the currency market with Mr. Joy, and later during the session we will discuss the commodities market with myself, Navneet. So welcome Mr. Joy. So Mr. Joy, how is euro trading in today's market?
Well, the euro fell by the most in 2 weeks against the dollar, amid concerns that the region's lingering debt crisis will hamper efforts by governments and banks to raise more funds. The common currencies weakened versus 15 of the 16 major counterparts before France auctions 8.5 billion euros in today's debt market.
Oh, that is around $11.3 billion.
Yes. The tensions in eurozone debt and peripheral issues remain unresolved, and that brought an amount of reality back to the euro dollar.
Okay.
That's why the euro slipped 0.7% to 1.3297 as of 1:55 p.m. in Singapore, from 1.3384 in New York on December 31st.
Okay.
The shared currency is poised for its sharpest daily decline since December 15th. The euro had its largest losses versus the dollar in 5 years in 2010, as concerns about the European debt crisis spared demand for safer assets. The trading bloc, the latest news is that the trading bloc added Estonia as the 17th member in the eurozone on January 1st.
Okay, fine. So we are having a new eurozone member in the eurozone group. So let us hope that that will be creating some balance in the group, and it will be helping in supporting the debt crisis that is going on. So what is the outlook for euro currency in this decade?
Well, as per the Center for Economic and Business Research, the likelihood that the euro area will exist in its current structure in a decade is 20% as government failed to take sufficient measures to tackle economic imbalance. So we are not hoping that the eurozone will exist in this decade.
Okay, fine. Okay, how is the yen trading in today's afternoon trading session?
Well, the yen gained for the first time in 3 days versus the euro after Chinese Logistic Federation and Statistics Bureau said on Jan 1st that its purchasing managers index fell to 53.9 in December from 55.2 in November. As per other data from HSBC Holding PLC and Market Economics showed a purchasing manager index for China declined to 54.4 in December from 55.3 in November. So there's two different data came into the market.
We are seeing some cooling off happening in the Chinese
economy. The yen also stood at a 3-month high versus the euro after Chinese report showed manufacturing expanded at a slower than forecast pace in December, supporting demand for safer assets. So that's also supported the yen to use against the dollar. The yen climbed to 108.02 per euro from 108.47, nearing the 107.61 level it reached on December 13th. And that was the strongest in September 14th also.
Fine. So how is Taiwanese dollar trading today?
The Taiwanese dollar extended last year's 5.5% advance against the dollar in that's the most since 2004. The island's consumer prices climbed 1.7% in December. That's the most in 10 months, according to economic survey by Bloomberg before the Jan 5th report. The central bank policy makers in Taiwan boosted the discount rate on 10-day loans by 12.5 basis points to 1.625% on December 13. That's the third increase in 2010. So the Taiwan's government is doing some policy changes to slow down the inflow to the economy.
In line with other Asian countries, increasing their key lending rates.
And the Taiwan's dollar rose to NT 29.118 against its US counterpart from 30.368 after touching 28.080 on December 13. That's the strongest since October 1997.
Okay, fine.
So after 13 years time we are seeing the levels coming back.
Okay, that is a very huge movement that is happening in the Asian currencies. That's great. So how is the US dollar trading today?
Well, the dollar gained against most of its 16 major counterparts and climbed to 1.3308 per euro as of 3:15 p.m. in Hong Kong, from 1.3384 on December 31st. US data this week will likely show employment increase for a third month and growth accelerating nation's factories and services. That's slightly positive for the US economy. The dollar index, which tracked the US currency against those of 6 trading partners, was 0.3% today. The greenback's gains today against the euro was the biggest in 2 weeks' time, as concerned that the Europe's sovereign debt crisis will dampen demand for the region's assets. So we are seeing that the US economy is gaining momentum and the weakness is showing in the European economy.
Okay, fine. So the US, please watch out for that key data releases that is coming in from the US front today, and that will be giving the momentum in case of US dollar movement today. Thank you, Mr. Joy, for your valuable insights. We will be back with more updates on commodities market right after this commercial.
Welcome back, viewers. We will discuss the commodities market with Mr. Nani. Welcome, Mr. Nani.
Thank you.
So how is the gold and silver trading in Asian trading sections today?
Yeah. Gold for immediate delivery dropped as much as 0.5% to $1,414.15 an ounce and traded at $1,418.70. Gold declined after yesterday's rally, last year's rally in fact, and the 10th annual advance prompted some investors to sell as the demand dropped down and strengthening US dollar. Markets will be keenly following the economic data releases that is coming in from the US today in the form of ISM manufacturing numbers PMI and ISM manufacturing prices. So these will be the key drivers for today's market. Bullions rallied 30% last year, the biggest yearly advance since 2007, climbing to an all-time high level of $1,431.25 an ounce on December 7th, as Europe's debt boost and declining currencies boosted demand for bullions. Holdings in exchange-traded products or ETPs backed by bullion gained 17%, so that was a massive increase that we witnessed last year. Probably that trend will be continuing this year also.
Okay.
The dollar index, which gauges the currency strength against 6 counterparts, climbed for the first time in 8 days after a Chinese report showed manufacturing grew at a slower pace than expected in December, boosting demand for safer asset classes. So that is why we have been seeing good buying interest that is coming into bullions. Okay. Silver for immediate delivery traded at was retail traded at $30.8988 an ounce, bearing an early loss of as much as 0.8%. The metal surged 83% last year, the biggest gain since 1979. So that we have been seeing the silver prices outperforming gold in case of the returns are concerned. Silver assets in ETBs gained 2.85 metric tons to 15,074.54 tons as of December 31st. Data from 4 providers showed, according to a Bloomberg survey. So that is also a very encouraging sign that is coming into the silver holdings part. Holdings reached 15,172.49 tons on December 17, the highest since last February. So we have been seeing a consistent increase in the holding part. That is a spot market performance of silver is very good compared to gold prices.
Okay. So can we expect that any slowdown in the US economy will be positive for the gold and silver?
Definitely, any slowdown in the US economy will translate into weaker US dollar. So probably the commodities will be bought as a hedge against US dollar weakness.
Okay, fine. So how is the energy market trading after the holidays?
Yeah. Oil demand increasing at almost twice the pace of supply, supporting the prices to reach new highs in 2011. Global oil use will increase 1.7% to a record of 87.8 million barrels a day this year, and output will rise by 0.9%, according to the US Energy Department data release. Crude gained 15% last year, less than the 20% advance of the Standard & Poor's GSCI gauge of 24 commodities. So we have been seeing very good buying interest that is coming into crude oil complex. Higher than average US stockpiles will limit price increases this year. US inventories were 339.4 million barrels as of December 24th, 7.6% above the yearly 5-year seasonal norms. So we have been seeing a consistent increase in the crude oil inventory levels in US, and that will be the key data to be watched out for during the Thursdays, every Thursdays in fact. Every Wednesdays in fact. Futures for February delivery climbed as much as 0.5% to $91.85 a barrel in New York today and traded at $91.57. OPEC's daily production capacity is expected to shrink by about 1 million barrels to 4.7 million as countries outside the group struggle to make up the shortfall. Production in largest non-OPEC producer Russia is expected to drop by 2% this year, while output from Mexico, which provides about 13% of US imports, might fall by 9%. So we are seeing a lot of supply constraint that is hitting the market that will be a supporting factor for the prices.
So Mr. Nari, the market has witnessed a 15 to 20% rise in the crude oil last year. So do you think that the OPEC will increase their production to decrease the price, or what's your comment on that?
Yeah, we have been seeing a very good rise in crude oil prices for the last year, and we expect the trend to continue in the coming years also. That is mainly correlated with the economic development that is happening in the US, and also in case of Eurozone also we have been seeing some good numbers that is coming from Germany's front, which is the largest player in Eurozone group actually. And coming to the Asian markets also, we have been seeing good numbers that is coming in from the China and also from India. So these demands will be supporting for prices in the coming year, like 2011, 2012. Probably we might be seeing the prices spiking to $100 levels in the coming months in fact. And we will be seeing the OPEC taking some action only if the prices spikes above the $100 mark. So that is what we are expecting in the market.
Okay, so it's very unlikely to increase the production at the current price.
Exactly.
Okay. Okay.
Because OPEC has already said that they are comfortable with the current price ranges, and probably they will be increasing the supply only if it hits from the top levels.
So, what is the trend that is picking up in copper in the Asian and European trading section today?
Yeah, copper continues to rise to record levels, extending a second annual advance owing to speculation that supply will be lagging behind demand in 2011 and also in 2012. Copper for March delivery on the COMEX in New York gained as much as 1% to $4.4925 a pound, the highest ever for a most active contract before trading at $4.4885. The metal surged 33% in 2010 as a global economy recovery from the worst recession since World War XI has seen substantial buying happening in industrially prominent metals, especially in case of copper. The London Metal Exchange and Shanghai Futures Exchange are closed today for holidays, so we are seeing not much volume buildup that is happening in base metal complex right now. One might say Chinese demand coming back into the markets early in 2011, driving a deficit in the global market balance. So that might be acting as a very good supporting factor for further price rises. Supply disruption in Chile, the world's largest producer, are helping as a very good supporting factor for the prices currently. A December 29 accident in Codelco refinery curbed output, while Anglo-American PLC and Extrata PLC's Colossi mine were closed down as there was an accident on December 18th. An earthquake of a magnitude of 7.1 striking Chilean cost is also supporting copper, zinc and lead prices. So we have been seeing substantial buying interest coming into the base metal complex in spite of this Chinese and also the LME holidays.
Okay, so all the latest news are very supportive for the copper.
Exactly, it's at least for the short term it is a very good supporting factor for the copper prices.
Okay. So thank you very much, Navneet, for your quick coverage. That's all for now, viewers. We will be back with more news and updates on the financial market in evening section. Till then, this is Joy saying goodbye with Navneet from Lattice Market Research.